Please remember that nothing we say here should be taken as personal advice. The conversation is for entertainment purposes only. If you have questions about your financial situation, please talk to a licensed financial advisor. All right, welcome to another episode of Future Money, where we talk about the investments of the future
that will make us money.
All right, the future is now.
The future is now.
Maybe that should be our new slogan.
Actually, I'm reading Elon Musk's book, and his kid, apparently, the reason why the Cybertruck looks like it does, because his kid said, why doesn't the future look like the future?
Yeah.
So the idea was like
so
to build it. Yeah.
Yeah. No, it legit looks like a car from
the future.
From Total Recall.
Mad Max. Yeah.
Yeah, Mad Max too. I thought more Total Recall. If you saw the Arnold Schwarzenegger movie from the early 90s.
Oh man, we're going back.
Dude, when I was a kid, I loved that movie.
Yeah.
It's ridiculous.
Arnold is awesome.
I love Arnold.
Did you see the article? I mean, the commercial on the Super Bowl.
Ads, it was
so
pretty good. Actually, my favorite commercial in the Super Bowl.
Yeah, it was pretty good. There's a few good ones.
Yeah, for sure. So as much as we'd like to talk about football, Tim and I have different meanings of the word football. He means soccer, and I mean football.
That's the real football. Okay.
Yeah. Whatever, dude.
Whatever, dude.
America.
It's okay. You know how many people watch the Super Bowl?
Yeah. Don't tell me about the World Cup. I know the stats. A lot more people watch the World Cup. I know that.
I mean, you know how many more?
Yeah, like 1 billion more.
Like 4 billion for the final of the World Cup versus
4 billion
for the final of the World Cup versus 100 million for the Super Bowl.
Yeah, but how funny are their commercials?
Probably not that many commercials either.
Exactly. The whole game just goes on.
Yeah, exactly.
So with that, we're actually not doing Super Bowl. Sorry to disappoint, but we're gonna do let's talk about tech.
Yeah,
right? Tech earnings.
The year, right? This year is starting out quite well. We're February 13th, basically right after the Super Bowl, and we had a really awesome year last year, and usually kind of the first second month of the year, we can start getting earnings and see kind of Q4 of 2023 and see if the numbers really match the performance of the market. And
right, the stock market always kind of tries to guess where things are going. And then earnings are kind of like a reality check as to whether that was happening or not.
That's a great way of saying it, right? It's a guessing machine, right? Like is a weighing machine. The stock market is still trying to figure out what is projections are going to be. Out of the projections are going to be exactly what people expected. That's why we look at surprises. We look at guidance and what companies are thinking things will be, and that will really kind of give us indication at where the world is going, right?
Yeah. And ultimately, earnings is what drives the stock markets over time. On the short term, markets can get overvalued, they can get undervalued, but over time, earnings are growing. That's what matters.
I think, and we'll talk about that in a minute. I think one of the question that I've been asked the most right now is about politics, and we had our last podcast about that. But at the end of the day, as you said, earnings is really what drives things, right? Everything else is noise, right? Company earns more money over time. That stock should theoretically go up over time.
Correct.
So
we had last year we had the Magnificent Seven,
right?
And while it's not.
Well, let's start. What's the Max 7? What's going on? It feels like every quarter we have a new name.
The Magnificent Seven, refers to the 7 biggest companies in the S&P 500, which ultimately are driving returns significantly. Between the 7 of them, they make up about 30% of the S&P now. Which is kind of crazy when you talk about 7 companies out of 500.
Correct. Who are basically almost 30% of the S&P.
Right. So it's pretty incredible. So it's from the top down, depending on the day. Microsoft, Apple, Amazon. I think Nvidia actually just passed. Amazon. So you have Google, Nvidia, Amazon,
and Meta,
and then the Mag 7 laggard Tesla is now because of Tesla's
Mag
performance
6,
what do they call it? The Significant 6 now. so we started last year talking about the Elite 8 because we added Netflix into it. And it went to the Magnificent 7, and now we've cut it to the Significant 6.
Right.
And I think after that we'll get to the Fab 5 and Final 4, and I don't know. Well, in the end. But these companies again are just It really just is incredible. You know, there's these stats like that every year there's market leadership, every decade there's market leadership change, and you know, the companies that ruled the previous decade don't necessarily rule the next.
Right.
And these big tech companies are really, you know, they're kind of defying, some of these tech companies are defying that statistic.
You know, it's a testament to like their market positioning, right? Like these, I mean, if Nvidia reports next week, and if Nvidia reports what they're supposed to report, we'll find out that all these companies together did almost $500 billion in revenue for the last 3 months.
That's crazy. That's just an insane amount of money.
It's
like
just ridiculous.
Just absolutely ridiculous.
I think that's the GDP of Greece, maybe.
No, I think the GDP was. What did they say? There was a stat about that. The GDP of Greece. Oh, it was like 200. It was like 200 billion. Yeah. And it was spent on like one thing. I know what stat you're talking about. I can't pull it up in my head right now.
Yeah.
But 500 billion in
those
revenue
are the numbers,
in a quarter
you know?
is just insanity.
Yeah.
And for what it's worth, like Nvidia, you know, I would even say 3 years ago it was kind of an obscure name.
100%.
You know, we've owned it probably for 7 or 8 years now.
Yep.
But nobody really knew who they were until last year.
And you know, this is a testament to also, you know, when you're investing in the stock market, you oftentimes it's really hard to figure out who are the winners are going to be, right? Yeah. So it's let's not, and I think, you know, a lot of our clients know this. You know, this is why we do index plus alpha at Gerber Kawasaki, because we you know, we try to index the market because we know that we're not going to be right all the time.
Yeah.
But if this is what you do, this is really kind of what you trying to achieve. You're trying to find the next winners.
Yeah.
Because when you find the next winners, you get an Nvidia, you get a Tesla, you get a Microsoft or Apple, who really kind of brings most of the returns for the last 10 years.
For sure.
In the stock market, right?
I mean, yeah, if you look at the chart of like those 7 companies over the last decade versus the S&P, it looks like the S&P was like, it looks like your money was sitting in a checking account comparatively. Like, it's kind of crazy.
If you've taken those 7 names out of the market for the last 10 years, you basically have no returns.
Yeah, it's pretty significant. Like it's a huge number. And again, this AI trend, and we've, you know, AI is for real. We're all here. We're talking about it all the time. But the AI trend only seems to be solidifying the idea that these companies are the companies.
Yeah, and I want to like remove the hype from the reality.
Sure.
You know, I think, you know, we've seen the Web3, we've seen the crypto, we've seen all these kind of, you know, meme slash, you know, buzzy words. What is it? Buzz to ratio to buzz.
That was our price to buzzword. That was the ratio we created.
Yeah, what, you know, I think what AI is doing is actually a different way of thinking about the next wave of innovation. You know? And this is not something that is unreal or not palpable, because you start to see it in the numbers. And this is why Microsoft had such a great quarter. This is why Nvidia is going to have a fantastic quarter.
Nvidia right now, it's the winner of everything, right?
Right.
And you're right. It is absolutely palpable. And I wouldn't, you know, not even to say it's the next innovation. It is probably the biggest innovation in at least 30 years, like at least since the advent of the internet.
Or mobile, or maybe even bigger on the mobile. Yeah, you're right.
Yeah, to me, it's like the acquisition of the internet. Like when Windows 95 came out, like 2023 to me was like the Windows 95 moment. I know people like to say the iPhone moments, which is huge for mobile when that happened. But the Windows 95 moment to me, like I vividly remember like going to my friend's house when I was 13. And he got this Windows 95 computer, and I had never
with that window and
and it was a lot of the screens were still like the
Alex,
green,
can we get the Windows 95? Like, you know.
Yeah, remember before the screens were still like, you know, the green writing, a lot of them.
Alex is like, I am.
Yeah, he's like,
I wasn't even born.
But I remember vividly like going on that computer with the colors and like we were doing a report for my 7th grade class, and we did it on. They had the encyclopedia on and I was like, oh my god, this is the greatest thing I've ever seen. Yeah. And you know, that was obviously just day one.
Agent himself.
Yeah, for sure. It's fine. It's fine. I'm still the youngest person on this podcast. Just to be clear.
That's a good
if
point.
I'm not including the production team and because I'm definitely not the youngest if we include that. But this to me, like the AI moment, is that Windows 95, is that internet, you know, AOL. It's like, you know, Microsoft and AOL. Kind of when that happened together.
Yeah.
So who are the companies that are benefiting? Let's kind of go through.
Yeah, let's go through them. Yeah. Again, you know, these are all companies are household names.
Yep.
And they're household names because of their pricing power, because they're ubiquitous. We use them on a daily basis, right? Yeah. But yeah, let's go over them. You know, and we have.
We'll start with Microsoft. I think Microsoft is honestly, to me, the most impressive company. Like when we talk, I just said Windows 95, right? And that was almost 30 years ago now.
Insane, right?
And it's the same company.
Well, listen, you had 10 years of basically going nowhere, so let's remember that.
That's true. Yeah. Thanks, Steve Ballmer.
Yeah.
Now he's been doing that to the Clippers instead. But you
not a Clippers fan, obviously.
No, obviously, Lakers all the way. But if you think of that, it's kind of incredible. There's not been a company who's been at the top for that long. Like they are consistently the company that's been in the top 5-10 companies for 3 decades now.
Right. I mean, listen, since the CEO Satya Nadella took over from Ballmer, he really made some amazing moves. From really buying by the gaming company, Activision, Blizzard, next door. But I think the OpenAI acquisition is going to be looked at, or not acquisition, they just have a partnership.
Strategic partnership.
Yeah, it's going to be looked at as probably one of the best venture investment from a corporation ever, right? Because they put $10 billion in 2 years ago, basically, or a year and a half ago.
Yeah.
Company's worth $100 billion more now. And but also
amazing.
Like they brought all these products and everything else that Microsoft makes, right?
Yeah.
So like this, kind of flywheel effect that we talk about, where now AI is really imbued in everything that Microsoft makes, right? Yeah. So we have here a company that really Office, everywhere has to use Office. Mm-hmm. Cloud is accelerating because of AI, right? Because they have all the compute power they need for this. Gaming again, and we just talked about it, is also going to be. First of all, Activision is a great property that was not run well.
Yeah. Yeah, it is a great company that's added, right? It went through a lot of hurdles, but obviously is going to add, good money to the bottom line of Microsoft.
Yeah, they already did, I think, $2 billion in free cash flow just from Activision last quarter.
And they have Xbox, right? So it's obviously a natural addition to the Xbox platform.
Huge. So here we go. We have a company that has like the first AI full IT stack, right?
Yeah.
Like if you're a company in the world, they're trying to kind of use AI and figure out how that's going to improve your operations. Microsoft's place you go to.
Yeah, so you can use ChatGPT. So for those who don't know how the Microsoft thing works, the AI, so we all know ChatGPT. Yeah. You just sign up through ChatGPT and you could just do whatever you want. You can also pay ChatGPT directly, like $20 a month, and get ChatGPT 4, which is the fancy version.
Right.
Way better data. It's like 1,000 times better or something.
Sure.
And then you can use Microsoft's Copilot. Yeah. Which is sort of there
was a commercial on Super Bowl.
I saw that.
Yeah.
Interestingly enough, this morning, to play the other side here, this morning there was an article, I believe it was in the Wall Street Journal, although I read it on the Apple News app, so I can't remember, that said that some companies are now being it's not perfect. There's a lot of kinks in it. Is it worth the $30 per seat?
Yeah.
In Copilot,
they're charging $30
per seat.
Wow,
for the premium edition, whatever.
That's amazing.
So obviously,
what that means, right? That means per user you pay $30, which if you have a company with 5,000 people, run the numbers,
Right. So I think that again we're in stage 1, obviously. So we're really just getting started. But if you think of on a global level, $30 a person for every user that uses Microsoft's Office suite, Azure, their cloud computing system, their whole product suite is just. It's almost like they're a mutual fund. They're like a group of companies in one.
Yeah.
So of the big tech companies that have sort of the most broad, diversified, like you buy it almost like I said, like a mutual fund.
Right.
Like to me, Microsoft is that company.
Right. If obviously the numbers show that success because they just passed Apple by market cap, so Microsoft has become really the biggest company.
Yeah, I mean they're like depending on the day.
Depending on the day, right?
Sure.
But again, this is like a come from behind win of the ages, you know. So,
100%. You know, Apple and Microsoft have always they've always been these rivals like since the 80s.
Right? Yeah, Steve Jobs versus Bill Gates, right?
Right.
You know,
so let's talk about Apple since we're already like talking about that, right?
Oh man, Apple is like,
Apple has this lull period right now.
Yeah.
Right. Like, there's
revenue is growing again.
Yeah, but like 2% or something, and you're like, okay.
It's so big.
I think with Apple, the key is like what's next.
Yeah.
Right. Services, we know that story. The services business is continuing to grow, but there's a slowdown.
Yeah.
Obviously,
China is hurting.
Although if you read the earnings report, like China's numbers were actually not nearly as bad as everyone thought they were going to be.
Well, they were down 13%.
Yeah, but people were expecting much worse.
Sure,
and right, this is kind of how earnings work.
Well, listen, China was down, but Japan was strong. Europe was strong. The rest of the world is really strong.
And actually, Apple is still like the top brand in China. That's the funny thing.
Yeah, because it is a 1.4 billion.
Well, but but what I'm saying is it's the top brand amongst Chinese people for phones.
Yeah. It's luxury, right?
Right,
it's
exactly.
Like,
so I think the fears in China are a little bit overblown.
Yeah.
Again, not that it's not concerning, but
so I think you're making a good point though. Let's go back about growth, right?
Yeah.
Apple 50% of Apple is iPhone.
Correct.
And 50% is everything else, right?
Right.
So I think the iPhone is, I think, 15, 16 years old now, right? It's been around for a while.
2007, yeah.
Yeah, right. So I think, and they keep innovating a little bit, but you know, it's iteration.
It's to be honest, I don't care if my phone's titanium or not. I'm not planning to throw it, off a building to see if it.
But so what happened with Apple is, I think 5-6 years ago, they really moved towards services, and they say, hey, we have this massive install base, massive user, they have, I think, almost 2.2 billion installed iPhone, not iPhone devices, iOS device across the globe. Yeah. So now they're starting to sell us services. Your iCloud, your movies.
I just updated mine. I'm sending a lot of money to Apple every month.
We all are. We all get emails from Apple. We charge a credit card.
Literally, but this is the pricing power that Apple has that I think other companies don't. Mm-hmm. Literally, all Apple has to do is say, your services for iCloud is going from $3 a month to $4 a month, and everyone's like, "You're like, it's $4, it's $1. Like, am I going to change anything?" And then boom, they get another several $1 billion to their bottom line.
Yeah, that's exactly it. So now we're all in that ecosystem.
Yeah.
We have
and we're locked.
We're locked in. I also trust Apple
for sure. That's the big one, and that's why I think Apple has the defensible, the moat. We always talk about it, like the defensible position, because they protect our data and they've locked us into this walled garden, as we talk about. We're kind of stuck there, but what's next, right? So the Apple Vision Pro,
get in mind this week.
We got our next future money has to be on the Apple Vision Pro.
We are doing
that for sure. Maybe we'll do it in the Cybertruck. Actually,
in the Cybertruck.
There's a Cybertruck. We won't name names, but there's a Cybertruck around
in the office.
In the office, and maybe that'll be our next future.
GK really embracing the future money.
We're going future. We're gonna have driverless Apple.
Alex,
Vision
you got
Pro.
that? We're gonna do Apple Vision Pro inside the Cybertruck. Let's go.
But the Vision Pro, it's getting, some reviews are amazing, some reviews are mixed. I think what is important is that we didn't expect, that it looks like they're going to sell 500,000 of these over the course of this year.
It's insane how big the demand is.
Yeah.
The reviews actually were very good because, again, this is not a mass product.
Yeah.
This is a new. I think the excitement comes from the fact that we have this new spatial computing opportunity for Apple to create some new growth, right?
Yeah.
The services, services for Apple was massive because margins are much bigger than iPhone margins. So that's growing too. But I think this creates a new avenue for them to grow down the road. Yeah. And again, I think with Apple is really Tim Cook is the grown up in the room, man. You trust the guy. Yeah. He's very measured in the way that he deals with things. Yeah. He's quintupled or sextupled the market cap.
No, it's like 12x now.
Shit, since Steve Jobs died, and
right. We talk about Satya Nadella, but look at what this guy has done.
Fantastic
with a business that was already the biggest company in the world at that time.
Yeah. Which
is funny to think that it was like 500. It was like 400 billion,
when
500 billion.
Away,
It was like the biggest
company.
It was 300 billion, I think, when it passed away, and now it's 3 trillion. So it's like 10x, 12, 11x, something like that.
And this is really how massive these companies have become, right? Apple does $300 billion in revenue.
It's nuts. But big news, other than the Apple Vision Pro, was that Apple teased the word that everybody's looking for in every earnings tech call.
Said AI
for the first time.
Yeah, this is how measured. If you follow earnings like we do, last basically 3 or 4 quarters, every CEO will come on and we'll throw AI on every.
I think I read one of the Amazon ones like last quarter, and it was like 54 times in the earnings call.
Yeah.
So if you say the more there's a correlation between how many times you say AI in your call and the stock movement of that call.
Yeah, it's like an easy one, right?
Yeah.
But Apple, basically didn't say AI until this quarter. Yeah. And this is why I think Apple is the grown-ups in the room, because the Vision Pro has so much AI in the way that it's designed, in the way that it's made, the way that's used, right? But they don't, they're not looking for buzzwords, right? They're looking for real application, for things that really make sense.
For sure.
But what you're talking about, which is really key, is we're going to have some kind of Apple GPT type thing.
Yeah.
Siri is going to be fantastic.
Yeah. And what we know about to me, this is what I'm excited about, right? So Apple, let's say they have a GPT type product. It replaces Siri, God willing, how I feel about Siri.
Oh.
But the 2.2 billion install base that you talk about, the loyalty of Apple services and products to this ecosystem, the fact that you're kind of walled in and you kind of have to be part of it, like the pricing power you start to think about, like let's say they do what Microsoft does and you get it's $30 a month or $20 a month or whatever the number is,
$10 a month.
The numbers,
they'll get 100 million
sign
up day one,
right? Exactly. And it's astronomical. And if you just think about iPhones and Macs and things like that, right? Like the system is already in place. Like there's nothing else that's needed. You just tack it on.
Yeah.
And if they have a good one, I probably won't sign up for Microsoft. I'd probably sign up for Apple.
I think they will have a good one. And I think the trust really factor is something that we all kind of, listen, Apple sells advertising like everyone else, but Apple does not sell our data, which is really key.
Yeah.
I think that's probably they were late to having some kind of a GPT model because like the privacy issues around them are fairly large.
They're always late.
Yeah, they're always late.
Apple's, I call them, they're fashionably late. They're the person who comes to the party and they're like, now the party can start. We're here.
Go.
Everything's good.
I like that. I like that.
Yeah. So Apple and Microsoft obviously very, very well poised. Google's earnings was slightly lackluster.
Well, Google is like, they kind of, you said Apple was fashionably late. Google was literally late.
Google was unfashionably late.
Yeah.
Google just it feels like Google showed up to the wrong party. They're like, wait, no, this isn't the right place.
And we speak about the AI kind of story.
Yeah.
And I think Google was late because there is so many more eyes on Google at getting it right versus OpenAI coming in as okay, we're going to disrupt it and we'll figure out that later. I'm never going to bet against Google because
no, absolutely not.
Yeah, because
the DeepMind AI at Google, and I do like Gemini, which is formerly Bard. Like I like them.
Yeah.
There is a fear of cannibalization of their own business as part of it, right?
The reviews on Gemini are pretty good.
Yeah, I like it personally. I use it.
Yeah.
I've talked about it before. I call it the internet summary.
Right.
And And there is, and I know Google will figure out how to monetize that. I'm not worried about that.
And also now remember, YouTube is a massive business. It's doing really well.
Honestly, to me, YouTube is going to hugely benefit from the AI
100%.
boom.
Like think about how much data that is, you know?
Data, content, and by the way, like AI created content,
right?
Like not even just like people, like Google using data to create. And I started to think, like, does Google start to create their own content through AI?
I'm sure.
Versus like paying content, creators to do it.
Or help content create better content for YouTube. Like,
that's obvious. So the applications are, so Google's, their ad numbers were very good.
Yeah.
They're slightly better here, slightly worse there. But again, of the tech companies, Google has the most reasonable valuation.
I think the biggest issue or the biggest worry is, does AI or Gemini cannibalize
their
search,
own business,
right?
yeah.
And sometimes you have to kind of take that risk in companies, because if you don't cannibalize your own business, you don't disrupt yourself. Well,
everyone thought that the iPad was going to cannibalize Mac sales.
No,
and it turns out that did nothing.
That did nothing. Yeah,
Apple somehow managed to convince us that we needed an additional device.
I have it right here. I don't use it every day.
I don't really use the iPad that much. I literally use it like to go to sleep with. Like
you sleep with your iPad.
I like fall asleep. I fall asleep like watching a show on my iPad. That's how I fall asleep usually. So Google was, again, Google knows how to monetize. I'm not worried. And again, they are, of the tech companies, they are the most reasonably valued. So therefore, like the market is not giving them the respect that they're giving the other tech companies.
Yeah. So I think watch out for Google.
Yeah, I like them. Again, all of these companies, Meta's always a painful one for us.
It's, we're not, listen, sometimes you have values, and capitalism, capitalism is brutal, like I think this was a lesson for us where I've never seen a CEO go to Congress and get in completely obliterated by a congressman about how harmful the product is to society, and then the next day they have the
largest single day increase in market cap in
$200 billion in one day.
Just unbelievable.
Gerber Kawasaki, we don't own a lot of Meta. It's not one of our investments. We do think it is harmful product, to kids, and they've been very responsible, and that's why we're not involved with the company. We haven't been involved in a few years, although the product is good.
They have good products. Zuckerberg knows what he's doing.
He's grown up.
The guy is smart as a whip.
Yeah.
And it pains us because we've been out of it for a while.
Yep.
We own it we own it indirectly, but we took a kind of a moral stance on Meta.
Yep.
And it is what it is. Like they're doing a great job.
I think what we're seeing is they're using AI very, very smartly to improve the effectiveness of their advertisement, how good Instagram is being used.
Yeah,
they're growing their user base of over 2.2 billion.
I don't know how they keep growing their user base on Facebook. Nuts. Like who's not on Facebook yet?
I don't know, man. I think half of the world is on their products.
Yeah, I mean it makes sense if you count WhatsApp and all this kind of stuff.
Insane.
It's like if you have access to a device, you're going to be on it.
But also, I think what we've seen is the efficiency that they've created, right? Like last year was the year of efficiency, where they basically fired 25% of their people.
This is something, so Meta big, Google did a decent amount of this too, but the year of efficiency, it was really just like a cleaning up the hiring spree from
sizing,
COVID, right?
There was a lot of bloat.
Yeah, exactly. But they're doing a really good job, and again, their AI is definitely going to help their ad business.
Sure.
They're the way they're doing it. Instagram Reels is doing really well. They just have a great products across the board. I personally hate social media. I am off it with the occasional go on Twitter just to look one thing up.
Right.
And after the Super Bowl, I kind of was looking at stuff.
It's funny you mentioned Twitter. They actually benefited tremendously from Twitter going into shits, right? So
why can't I think of
all the advertisers are moving?
What's the Twitter equivalent? What's the Twitter equivalent that Facebook came up with?
I can't
Threads.
Think of. Threads. Yeah.
Thank you.
And I don't think anybody is on that, but
I think people are. But this is the testament to Facebook Facebook's power to Meta's power.
I mean, listen, they copied everything.
They copied everything. They're the world's greatest copycats. And somehow managed to do it, and nobody gets they're like, oh, TikTok's doing this. Oh, we'll do Reels.
Yeah.
Oh, Twitter did this. Okay, we'll do Threads. That's just what they do, and well, they do it well.
Yeah. So despite being a very harmful product to teenagers and young people, and really a net negative to society, I think they are performing in a way that is.
They're and obviously in video, I guess let's talk about the
I want to leave
the guy
video,
that got the guy that got dropped out, the company that got dropped out of the Mag 7, Magnificent 7, is Tesla.
Yeah, and listen, Gerber Kawasaki does not fall in love with stocks.
Yes.
We just date them.
We marry them, we don't date them.
Yeah.
We fall in love with them, but we could fall out of love also.
Yeah. And that's Tesla's story for us right now. It's unfortunate. I mean, the number, the proof is in the pudding, right? The numbers show how tough it's been. And the problem with Tesla is threefold. One, macros. The market just kind of changed a little bit. Two, micro, internally, the CEO is distracted. He's focused on, I think this Twitter purchase has been one of the worst things that could happen for Tesla.
For sure.
He's basically creating a ton of controversy, which is not good for selling cars. Simple as that. And thirdly, just execution, right? The company is not really doing as good. They're reducing prices. They're sending mixed signal to the market. I think you just got rid of your Model Y and got into BMW, actually.
Yeah, can you imagine 9 years at Tesla?
9 years at Tesla,
It's funny
right?
because the Tesla salesman asked me why I got rid of my Tesla, and I gave him multiple reasons. I said, number one, the cost cutting every month, it just leads you to just feel like you've been gypped every time
100%.
you do that. I go to
There
Elon.
is a psychological aspect of that,
For
right?
sure.
Yeah.
For sure. I had a conversation with a client yesterday who told me that about their Tesla. And Elon is honestly he's we all used to be really big Elon fans. We were all fans of what Tesla has done and is doing for the EV market.
Right.
But
he single-handedly created that EV market, but at some point, you got to...
Exactly. His antics are so I said, I am not a fan of his right now. I do not approve of what he does, both personally and professionally.
Right.
And I'm not confident in his ability to lead the company. And frankly, he said that in order to produce an AI product, he needs to have 25% of the company to focus on the company.
I mean, it's
come on,
blackmailing, dude. That
it's
is
ridiculous.
Imagine if CEO of any company comes in and say, if you want me to create a product, then I'm going to have to go outside. That is just silly.
Yeah. So he's just creating a lot of distraction, and it really is that I don't think they've done enough refreshes of the cars they have. Also, they all kind of look the same.
Yeah.
And again, 9 years I had 3 different Teslas.
Yeah.
I love the company. I love the products.
Yeah.
But they're having issues right now. And I still think if we look 5 years out, 10 years out, Tesla's
honestly one of the biggest opportunity, and I hope he finds a Tim Cook.
That's the thing. That's the main issue. Can he do that? And I don't know. I really don't.
And without kind of talking about what we trying to do with individual accounts or clients, we sold a little bit, but also we believe long term it has one of the biggest upside potential.
It does, assuming they can execute.
If they can get their shit together.
So hopefully they do, because I do think they do a lot of good for the world in general.
Yeah, I mean it's really fantastic company.
And there's a lot of people in the company that are great.
Yeah, that's exactly it.
And he's unfortunately created a toxic environment. Now the judge is nullifying his $50 billion. I don't know. I mean, I think it's going to be contested, frankly, and I think that he's going to get it ultimately. But there is merit to the fact that the board is really not independent.
Listen, and that's exactly what the ruling was about. And just kind of to give some backstory to this, basically the comp package for Elon, which was approved about 4 or 5 years ago, ended up getting him about $55 billion, was the biggest compact for any CEO. But what happened is he had like these really insane metrics to get there, right? And this was done when the company was only worth $50 billion. Now it's worth $600 billion, right? But that's been nullified by the Delaware judge 2 weeks ago, and now there is going to be this whole kind of more legal.
And the argument, the argument was that the board was not independent. The board is not.
That's exactly it.
Doing their fiduciary responsibility to the shareholders.
Yep.
And we'll see what happens. Listen, but again, just another distraction.
I think minority shareholder rights is probably one of the biggest things that we can have in our capital markets, right? The fact that you or I can own a stock in a company and still have rights is really why everyone is envious of our capital markets.
Yeah,
and if you believe in capitalism like we do, this is one of the most important things. Right?
One of the problems with that is this rise of passive investing. Right. So the biggest shareholders are ETF companies who don't vote.
Right.
So a lot of times our say doesn't matter as much, which is tough.
And that's something that we need to deal with, right? Because that's a
story for another day.
Totally. We can talk a lot about this.
So that's Tesla, and I think we should at least mention the ultimately what's the
most exciting story
is the driver of all of these companies currently, all the growth that's happened over the last year, and the excitement that has been reinvigorated in the market with AI is a little company called NVIDIA. You might have heard of them now.
It's not a little company.
It's a little company. It's a little $1.8 billion company that you might never heard of.
Yeah.
And again, just the engine behind everyone. Everybody talks about NVIDIA. Every earnings call, NVIDIA is mentioned. Like AI.
I mean, for me, looking at everyone's earnings, the one thing that was going up tremendously for everyone is their capex.
It's capex, capital expenditure on AI,
and that's basically buying more chips and more H100, AI chips from NVIDIA, right? So I think NVIDIA is really, think of it as the oil that makes the machine run, right?
For sure.
So
I look at it as like, right, if again, I'm going to date myself again. If you remember Intel in the 90s when the PC revolution was happening, Intel was, it was Microsoft and Intel. Those were the two companies, right? Now it's Microsoft, Apple, and NVIDIA.
Right.
And NVIDIA, I think we skipped Amazon, by the way.
Amazon, was not a...
I think Amazon's going to hugely benefit from AI, by the way.
AWS, massive, right?
And all the suite of tools that they have. I think AI does a great job. I think for shopping, obviously we know that's a low margin business, but their ad business
is
and
crushing it.
Right. Their ad business and AWS are the driver. And I think AI is just going to only solidify that. So I actually really like Amazon, always have. But I think this AI is gonna again further their stronghold in this area. Right. But NVIDIA is right now is the belle of the ball. It's the prom king and queen. Everybody wants to be there. Everybody wants to be a part of them.
100%. Yeah. If there's a party, NVIDIA is running it. It's the promoter.
Yeah, exactly. It's the person who owns the house.
Yeah, totally. But they don't report to next week. So we'll be watching those numbers.
We'll see.
But the expectations are
crazy. I mean, like it's just unbelievable. It's up almost every single day.
Yeah.
Like
even when the market's down.
Even when the market's down today.
So before we wrap, the question I'm getting a lot of is, do we buy these stocks?
Yes. Question mark. I think again, going back to where we started this conversation this is the beginning of an AI revolution.
Correct.
So we can talk, markets are not cheap, but they're not crazy expensive either.
Right.
We don't even know right now
what
the power of AI for earnings over the next 5 years is.
No, we don't.
I don't even think we have an idea of what it's going to look like.
Yeah.
So my answer is yes. But like anything, you don't throw all your money in at once. You stick to disciplined approaches. You dollar cost average.
100%.
You think of how much money, how comfortable you are with risk, because these are companies that can be volatile when in down markets.
Yeah.
And this is why we do future money, right? So I think we should wrap and talk about this. The S&P's earnings, we talked about earnings. The market's earnings are up about 3%. Right. Not a hugely exciting story.
Yep.
But if you look at the sectors specifically that we talk about in this podcast, the future money sectors, I'm going to call them.
Yeah.
It's tech, communications,
healthcare,
and consumer discretionary, like Amazon, Tesla, like they all belong in that category. These are by far the biggest earnings gainers in the S&P. The laggards are your energies and your staples.
You know, it's funny you say that because the stats are, and they're really crazy. 27% of the return for the last 5 years in the S&P was earnings growth from these top 5-6
it's crazy.
Like it's just so you're buying basically the top of the cream, and that's kind of what happens when you do that, and you see them execute one quarter after the other.
But again, you have to be disciplined. You can't put all your money in these stocks.
And also, if you own ETFs, right? If you own index funds and stuff, you own all these companies too. You own all these companies, and this is why passive investing has grown up has risen up so much, is because people don't want to really try to figure out who are the next winners. Right. And you own everything, so that's not a bad strategy necessarily, and it works, so
so I think in future episodes we're gonna continue to talk about AI trends, where this is gonna lead us in the tech market. This is gonna be a topic that's gonna be around for a while, and man, we're gonna continue to try to look for topics and or companies that sort of
will benefit from this. This is just the beginning, I think. And
so don't think what's going to happen between now and 6 months from now. Think of what's going to happen between now and 2030.
5 years, right? Exactly,
Like in 2030, things are going to look vastly different. And it's hard for people sometimes to keep a long-term perspective today because access to information is so immediate and so instantaneous, and you see the market go up 1% or down 1%. It's like, just try to tune that noise out and think about, what are these businesses going to look like in 5 years?
Or talk to your advisor.
Right? I recommend not doing it on your own in general.
In general.
But talk to an advisor. So with that note, we'll sign off.
Thank you for another awesome Future Money, and I'll see you next month.
Cheers.
Cheers, guys.